Welcome, family, to another Stock Sermon Sunday. This is our weekly live analysis that we do for the economy, the stock market, and if you're looking to trade, or if you do trade in the stock market via options and or futures market, crypto, this is the place for you. I'm going to go over very quickly. Here's a recording because I am on my virtual setup traveling for the holiday weekend, but I want to make sure I got a video out to you all to make sure you're ready and prepared for the week. So without further ado, let's jump into it. I want to make it short, sweet, to the point as much as possible. So if you give it your time, your energy, pull up your charts, get your notes ready, all those good things. And if typically on lives, if you haven't been on one, I'd recommend joining one, put it on your calendar. It's at 7 p.m. Eastern Standard Time on Sunday evening. So if you could join us, we'd love to have you about an hour, hour and a half max, and turn on your TVs, pull up the family, and get educated, as we call it. All right. So without further ado, I'm gonna jump into the charts. I'm gonna look over the economic calendar, also look over the earnings that are coming up as we're approaching earnings season, heading into this quarter. So exciting times where the market is extreme greed, as you saw the thumbnail. So I want to touch on that as well, and some plays. We got Amazon that has their Prime Day, so maybe some attention on some Amazon, some shopping, some retailers, things of that nature. All right, without further ado, let's jump into it. As we always do, we jump over the economic calendar first. And as you can see, if you've been on here before, you know what I call it. I call it my free Monday, FREE Monday. That simply means we have no really interruptions in the market via data points, anyone talking or speaking. So when we have that, the market typically continues in the direction that it has been going, which right now it is extremely bullish, even in extreme greed. All right. So expect the continuation to happen tomorrow. However, we got to be on caution for the latter half of the week as we have FOMC meeting minutes reading on Wednesday. All right. So I do expect some profit taking coming in, leading into that minutes of the Fed FOMC meeting reading, as well as initial jobless claims and a couple of Fed speakers, but nothing too drastic this week. So we should see simple movement, nice potential volume as some stocks are still running. And nothing really there. Consumer credit will have a little bit of effect, but that's after hours. An hour before market close. Wholesale inventories, 10 a.m. data. As we know, any 10 a.m. data is going to be important to pay attention to, but nothing really there to write home about. Let's go into the earnings here. And as you can see, the names at the end of our week look pretty familiar, at least one of them, a couple of them. Delta. All right. We have the earnings season typically starts with airlines and it goes into finance. So what we'll see the coming weeks is we'll have those financial names that have been extremely strong starting to step in, as well as airline names, which also move the market slightly. All right. So pay attention to Delta on Thursday morning as they report. They may have some opportunity for some trading, but other than that, still no big names that we trade on a daily basis. So nothing there as well. All right. Let's jump into the charts here. And as we do always, we go into SPY. All right. And actually, before we jump in the charts, I did promise that we look at this fear and greed index. Okay. This is probably the most important piece of this trading investment game or anything. If you can understand simply this, all you have to, it's a free tool, type in fear and greed index. Okay. And a lot of investors, long-term investors, meaning you hold the shares, you're not trading them for a short period of time just for some cash flow. You're holding these stocks. Okay. When we're in extreme greed, that is the time where people are rah-rah and celebrating. I told you so. Everything's good on the home front, right? The market is extremely bullish. Okay, but when we get in extreme greed, what you'll typically see is some type of event come on. Okay, whether it's some negative news, whether it is the war. I'm sorry about anybody want to buy a new Genesis? Okay, the war. It could be tariff news. It could be a black swan event. Something comes up typically and knocks the market back down into a reality check. Okay. Now, what you'll also see in extreme greed is some profit taking. Okay. That does not mean the market's getting weak. That does not mean the market's going to tank. It just simply means that when we get in extreme greed, what's the saying? You want to be a little bit more fearful when people are greedy, and you want to be more greedy when people are fearful. So when the market was in extreme fear in April time frame, that is when you wanted to buy up those dips of those stocks that were on discount. When we're extreme greed, the market's at all-time highs, it's pushing. Now everyone gets excited and wants to jump in the market, okay? So if you're not already in, my recommendation right here to start off this video is for you to sit cash or dollar cost average into your favorite stocks. This is not the time to load the boat on your favorite stocks, in my opinion, okay? Now, if you have some conviction, if you have researched and done your due diligence, I'm just a guy on YouTube. Do not, into what you've done your research on. But a lot of your favorite stocks, the Nvidia's all-time highs just hit 160 on Friday. You've got Palantir that's already pulling back a little bit. Right, you've got AMD that still has some room to run. So there are some sleepers, and we do have their earnings coming up. Microsoft hit 500. You get my gist. Meta still running, pulling back now, all those things. All right. So we'll look over some stocks here that we may pay attention to that are still on discount that you can dollar cost average into. But some of those main ones I just mentioned, I would hold off just a little bit. Dollar cost average, meaning just put it on a recurring buy. If you don't know how to do that, I do have a lot of beginners on my channel. So recurring buy, you can go into your brokerage, okay? Go into your place where you buy your stocks, okay? If you don't have one, links are down below. You can join Webull. I don't know how, they're giving out a lot of stocks now on Webull. So if you want to use the link down below, that is an affiliate link. It does help out the channel. I truly appreciate it. Some of you have been using it as well. Most people have Robinhood, but if you don't, you're welcome to click that link down below as well, okay? So you go in your marketplace, in your brokerage, you click recurring buy, put it on like a subscription, okay? That's the easiest way that I tell someone to dollar cost average. $5 a day, $10 a day, get you a monthly budget. And if someone says, hey, you should buy Nvidia, right? Don't load the boat at one time, right? Put it on that recurring buy, okay? And that will help you, especially if you're at all-time highs when the price is at a premium, okay? So with that being said, now you've got a gist of how the market is operating right now, okay? So here's the S&P 500 SPY, okay? And one thing I want you to pay attention to as well, how we know as investors and traders that the market needs to cool off. One is that fear and greed index. The second is simply this RSI, okay? Relative strength index, okay? Do you see this right here, RSI? Don't worry about these numbers. I know I have a lot of questions on them. We can talk about, I can make a whole video separately, but I just want you to know that it's kind of like this too many cooks in the kitchen indicator. When the RSI, and you can see on my intervals down here on the cursor, I typically like to start on my higher time frames, okay? So let's just look at a daily to start off with. Do you see this RSI when it gets up here above 70? Okay, do you see that to my right of my face or left of my face, however you're viewing me? And then 30 at the bottom, okay? So if you just simply understand when things are at over 70 or 80, or sometimes you'll see even 90 RSI, okay? That is a time when the market, the stock or the index is at a premium price, okay? That is not the time to load the boat yet again, okay? You want the RSI on a lower scale down here at 30, 40, or even in the middle at 50, okay, RSI. You can see here on this chart, do you see how the RSI matches up to where the stock price is going? Here's the chart, okay? I always like to try to clear the chart because I have new people to join and I never want to have anyone lost. Do you see how the chart, there's that big dip of the tariff news, okay? We came into the 2025 season, the new year, and we just started pulling back pretty heavily. Do you see the RSI was underneath 30 on a daily? That was the time when dip buyers came in. Now do you see the RSI is back here above 70? And if we go back on the RSI, we can see last time it was up here, do you see what it correlated to in the market? There was a pullback, okay? Gets up to 70, slight pullback, gets up to 70, slight pullback, slight pullback. And as you can see here, when we're in a bull market, it does not mean that the market is going to tank, okay? Do you see that that trend is still up? It just means slight pullbacks that might happen, okay? So you don't necessarily know how far it is going to pull back, but there will be some type of slight pullback. It could happen within this week. It could happen in the middle of maybe next week, right? But at some point you will start to see the direction, and the exhaustion of the market start to happen, okay? So look what happened here towards the latter half of the day on Friday. Do you see how we were gapped up right here? And we started pushing, okay? Hopefully that helps. We started pushing. Now I do apologize if y'all are like, this looks super dim right now. All right. So you see how we were pushing right there? And then we started pulling back just slightly towards the end of the day. That's simply profit taking, okay? Because we did not give it all back within the end of the day. Now, if that candle was a little bit more drastic like that, then yeah, I would say probably Monday might have a little bit more of a gap fill continuation. But my expectancy now is that until it's proven, just don't even believe it, because we could just continue up like this a little bit higher and try to retest that 626 and maybe even try to get to that, 630. Who knows? Okay, especially with Amazon Prime Day and some of the stocks still running, you never know. All right, so I want you to keep an eye on that to understand that, okay, do I participate in this overextension, or do I be patient and sit on my hands and just wait for just a second to see which direction we're going? Okay, especially if you're a bull in this market, I think the risk to reward right now is a little bit more on the downside because you don't know when that drop is coming. Okay, so you can keep your stop losses on if you are a bull and you play calls or you keep buying shares on the upside, right? Just be mindful to keep those stop losses tight, because I've seen it too many times where out of nowhere, look right here on that 30-minute, out of nowhere you get that, pretty daily drastic pullback, which is, right there, it's not drastic, it's only 1%. So, but it looks drastic intraday, as I always say, okay? So could get that, never know, right? Look at this overextension. Do you see right there? It looks roughly the same. And there's that 1% pullback for the day. SPY went from 616 back to 610. Okay, so that's a $6 drop. Could it go back to 620? Maybe, right? So we'll look out for that in the start of the week to see which direction we go. However, I think right now I'm leaning more towards some more convincing and convicting put options if we see some signals come in. All right. As you can see here, the market, the futures market is already showing a little sign of red. Do you see right there on ES, NQ, and RTY? Already showing a little sign of saying, hey, we're going to participate on the downside before the market opens officially in the New York session tomorrow. However, it's already happening on Sunday where the futures market is open. Okay. So that's confirming there a little bit that some more profit taking is happening even during the futures session. All right. So I don't personally have levels here as far as where I would personally look at this 622, okay, as a pullback level. If we pull back into that 622, right, can we retest and go higher? Potentially, right? But I'm really more so liking the higher we go. If we grind up a little bit higher, I would probably look for some put options on SPY. If you are a SPY or QQQ or IWM trader, okay, I would look for some put options towards the end of the week or the beginning of next week. If you're a person that puts on a little bit more time, you could look at July 18th date, okay? And do you see right there that 615, how much interest is on there already? Those are close to $300, but it does give you a little bit more time, right, for that bigger pullback. I know there's some interest on the higher side, so that's what I'm saying, that the 630 could come in, we could push higher, right? It's not out of the question, okay? But I would say that just protect yourself, hedge yourself. Another way to do that is SPXS, okay? This is the inverse. So when the SPY goes down, this goes up. I typically tell my clients and community members inside of Leverage University, if you want to join that, I didn't mention it before, the link is down below. There should be a discount code that is active right now for the holiday season. It gives you 20% off. Use July 4 as the discount code, not 4th, just July and the number 4. And it should give you 20% off. So if those have been lagging behind or wanted to join, or if you've got a referral, right, let them know that that is deactivated tomorrow on Monday. Okay, Monday after this recording at 11:59 p.m. Eastern Standard Time. All right, so you have a full pretty much day to decide and take action on if you would like to join the Discord. If not, perfectly fine. Just make sure you support the channel, hit that like button, subscribe button, share the video out. Okay, so SPXS, do you see here that when it gets down here, let me show you what it looks like when there's a bigger pullback. Okay, So right in here, do you see that slight pullback there in May? There you go. There's that green candle. And when the April crash kind of happened, there was the big pullback there. It went from roughly about $5 to $10. Okay. So you can hedge with SPXS shares if you would like. Okay, you can begin picking up some shares underneath this, around this $4 to $4.50 level, and you can, essentially hedge your portfolio. That means that if you have stocks you don't want to take profit on, you don't want to sell, you can buy some SPXS to protect yourself. Okay, if the market pulls back, right, you can sell the SPXS at a profit and then buy more of your favorite shares if you'd like. Okay, so that is a hedge position, as we call it. And then SQQQ, and I'll jump into QQQ in a minute, is another one as well. It coincides with QQQ, okay? The Invesco QQQ Index Trust ETF, right? And we just call it the tech index, primarily the NASDAQ, all right? Same thing here, as you can see, right? It does have a little bit more room, not much, but you're more than welcome to pick up some some SQQQ shares as well. If you feel the need to protect your portfolio, if you have some heavy positions, you're more than welcome to do that. Now, I'm not recommending it for everybody, but you could just protect it, especially for those people that have bigger positions. You're up 100%, 200%, 150%, 300% on your share positions, right? And you want to protect those, right? You can pick up some of these at a cheap cost. And when the market pulls back, or if it pulls back, when it pulls back, it's not if, it's when, then you'll be a participant of the downside with shares, with the inverse. Okay, so when the market pulls back, again, these go up. Okay, let's go to QQQ. Same thing. I'm looking at that 660 level. Okay, it's close enough to that 660 level on QQQ, but a lot of the tech index, the big tech companies, have made some big moves in the previous weeks. Okay, start off the month of July, ended June strong. So I'm looking at that 660 level if we do take off a new high as a top end. Now, if this 557 and this 555 kind of become a little bit more of a resistance, okay, you see there, if we break below those supports, it's right now it's holding about 555. We break below 555, then we could pull back a little bit lower into that 553. And if we break 553, then we're coming down into that gap fill at 551, okay? So I kind of like the chart on QQQ a little bit better. Personally, SPY has just been absolutely ripping because of finance and healthcare starting to pick up. I've been able to kind of control QQQ a little bit more, right? As SPY has been kind of leading the pack a little bit stronger, where I'm like, man, this thing needs to pull back. QQQ is kind of giving a little bit of that exhaustion, but SPY is just ripping, okay? So I like the QQQ chart. IWM, let's jump in there. And IWM is extremely strong. I don't really like shorting this because there's so much resistance that's still up ahead at 226, 230 up ahead. And I'm not saying, but it has broken a very key moving average here on a daily time frame. Do you see that it is above this daily 20 and daily 200, and it just broke above it? Okay, so I would look for more so this 225, 226 level in IWM. I'll mark it here in red. Okay, 225, 226. If the market continues a little bit higher, especially IWM, that I still like the risk to reward on the downside more so because we keep gapping up. So if it breaks this kind of rising wedge, if that's a bull flag, or if it breaks out of that wedge to the downside, right? We got 220 back down below. Now, IWM is so strong that I've been liking the pullbacks for call ideas a little bit better. So if IWM pulls back one more time, I still like that call idea on IWM. So if it pulls back like this one more time, reclaims 220, holds, right? You can have calls a little bit, more. I like this IWM chart a lot, right? Make sure it's holding this trend line here at 220 and 218 are your levels. 220 and 218, okay? That is your pullback zone, all right? Now, if obviously it breaks new highs above 224, then you've got about a $2 to $3 range on IWM for a little bit higher, okay? Let's jump into Apple. My goodness, Apple. All right, so Apple, I was hoping for a bigger pullback on Friday, did not give it, right? And now it's in this grind channel, okay? Not my favorite setups on grind channels like this without a pullback. This is what I mean. It simply pops and then starts grinding in this rising wedge channel. So when you see that, typically you want to have a patience reaction to see if it breaks above with strength out of this rising wedge, or does it pull back deeper into this 208 again, and then we can get a proper bounce, okay? The reason why I'm saying that for Apple is you want to look left, and it needs to break above that 214, okay? So if we do get another breakout above 214, 215, right, more calls. Just pick up more calls. If it drops, pick up more calls, all right? So I like a pullback. You can see this daily 200 is my target, that 222 level right there. And then we got 225 up above that, okay? So Apple is on a move. Pay very close attention. I want a pullback to get in to August calls and July calls. And I told y'all already that this was a trade that I mentioned last Stock Sermon Sundays, and I'm hoping to get involved in it because I missed my entry 2 days in a row because I wanted longer calls. I didn't want to, chase this for little day trade scalps or moves there. I wanted to really enter at 203 break or 206, and I just missed my entry, had some family stuff going on at that 208. This was really the one that I wanted right there. So if I can get a pullback into that 208 or 210 level and it holds, I really like that personally for a better risk to reward entry. Okay, so Apple, watch that 208, 210, or break above that 214, and then ultimately that 215 level. You can see here that there's a gap fill that you'll be starting to enter right there, which it already started trying to up into that 220 and 222. Okay, Google, let's go. Daily, same thing as IWM, above that daily 200 and daily 20 level right there at 173. Google's extremely strong. Remember, we got tech earnings coming at the end of the month, okay? End of the month. So pay attention. A lot of these tech companies, this is the time you want to start gathering. I told you, Apple, Google, Amazon. Apple, Google, Amazon. Those three have been lagging behind, and they've got a lot more room to run, okay? So those are the ones that, if you're asking, picking up some shares, putting on recurring buys, maybe keep buying call options if they drop lower, right? That I like them. I think personally that they've got a lot more room to run. Obviously keep your stop losses, but the chart is telling me very, very bullishness as it's building and building and building and building into its earnings. However, we could have some type of shock and come back down there again, right? There's always, a thing that could happen. But if it falls, pick up more, all right? Pick up more. So Google, your key levels right now is 179 and 177, okay? 179, now obviously I want to keep a bigger macro demand support down here at 173, 174. That is, prime position for entries right here. But it may not pull back to there. So I've got to get another entry, which is right around this 177 level if it does pull back there. But right now, as you can see, if it's building and building, it might break 180. And then we've got blue sky territories above that 182. And we got 185, 190 in sight. If it starts doing that, if it breaks a new high leading up before earnings, like that 182, do you see that? That is a key level right there that if we break through that, it's going to be squeezed territory, in my opinion, okay? So watch Google. It's on a move. As you can see, it tried to do it last time here, got stuck right there, pulled all the way back. So look left, you'll start to see some trends, but extremely bullish on Apple, Google. Let's go into Amazon. Amazon Prime Day coming up the 8th. Okay, so if you want to buy something on Amazon, if you already have your cart full, that's great. Okay, wonderful. But don't forget that if you have a little extra income, have a little extra money sitting on the side, right? Why not let Amazon pay for your stuff? Okay, so Amazon Prime Day. I'll go back last year on Amazon Prime Day to give you some context. Let me pull this RSI back down here so you can see the full chart. And this is the beauty about charts. You can go back in time. Look at the bottom of my cursor here, and the July time frame of Amazon Prime Day was right here. Okay, same time. Okay, right after the the 4th of July, excuse me, and you can see right here what happened there. So a lot of times people think that it's very bullish going into news or going into a big event, and sometimes it is, right? However, what happens is the buy the rumor, sell the news typically comes up. So what I want you to pay attention to is look here what happened when it was running up into Prime Day and then pull back pretty heavily. Okay, let's see how big this pullback was. Okay, over the 10-day course, it pulled back almost 8 to 9%. Okay, so am I going to say that this is going to happen again? Right? We don't know. We've got to react. We're reactionary. We don't guess. We're not gambling. Okay, but 225 is very, very important on Amazon because it's a psych level, right? 5s and 10s psych level. So I'm looking at this 225 level as a level of resistance. We're also in extreme greed. Okay, so if I look left right here, that was a kind of a former support right there. And then it kind of comes up in some resistance around that 225, 226 level. And look where we are now, kind of approaching it. So does Amazon want to do the same thing and pull back with its Amazon Prime Day? All right. This is, again, my rule of thumb is do not chase when you're like, man, every day it just keeps going up and keep going up. And if you're trading more specifically, right, that is where you need to be a little bit more patient. Okay, I had one of my community members tell me, Dennis, you know you are, what's going on if you're watching this, right? I'm so glad that I waited on this market, right? Because I've told my community members, if you have shares, this is a great time to celebrate. Like you have shares, which some people should and other people don't. They're waiting on their opportunity, right? So investing long term, this is a good thing, right? You don't care because you're like, keep going, Amazon, keep going, keep going. Like it doesn't matter if it pulls back because you know it's going to go back up. But trading is a little bit different, which is why I always try to distinguish, especially for my beginners, the difference between investing and trading week in, week out, or month in, month out. Okay. Seasonality is very important. So if you chase this up here into resistance, right, with call options, okay, meaning pick up the phone going up, then you could get trapped and it could pull back like that, okay, back into that support of 218 again, okay. So if it does that, then you're trapped because you entered up here in resistance, pulls back, and then it rips from here, okay. Very similar. Look at this. Pushes up into resistance, pulls back, breaks into a new high, pulls back, breaks into a new high. Okay. So Amazon, I'm going to be watching those deeper support levels if possible, just because we're a little bit overextended on the market. Okay. So if Amazon wants to do that, 2-3% pullback, right, that is a possibility. So let's see where that is. That'll be right in here, right at that 218 will be 3%. If it does something crazy, the next 2 weeks, there is that bigger pullback like that, okay? Which is that's not uncommon because that will still be technically a higher low on the daily trend count, okay? That just simply means that we're pushing up into these levels right here. I'm on a daily time frame. We're going up, pulling back, going up, pulling back, going up, pulling back. And if we can come back into that 210, 209, then still it's going up. So that's a lot of times what I'm waiting on when you hear me say, man, I hate, another gap up, another gap up, another gap up. Because as a day trader or a person that looks at, intra-week trading type of thing, right? You're looking for entries. So again, if you haven't listened to some of my beginner videos on how to trade options or looking at the how to chart video, entries are so important when it comes to trading. Right? Long-term investing, just buy whenever, hold for 10 years, you're great, right? On solid companies. But trading, you need a proper entry for the reward to be worth it. All right. So what I'm saying is I want you to watch 218 as a level for buyers to step in and hold. I want you to watch back here at this 210, that would perform a higher low right there. If we do break through that 218 and come deeper back down, would be 214 right here, okay, 215, right, and that will give us that continuous uptrend right there. Okay, so if we can pull back into that 218 to 216 level, right? I just want a deeper pullback if possible. All right, so Amazon, don't get trapped up here. Could be a pullback. We do have some gaps below, as you can see right there, that need to be filled. All right, there's a gap right there, and there's a gap right back down there. Okay, so I will be looking at Amazon for maybe some traps coming up into a big season for them for Amazon Prime. So a lot of times they'll report the Amazon Prime numbers or the reaction to it, you know, shortly afterwards, how it performed, so on and so forth. All right, and that could be dealing with consumer spending, which a lot of people don't have a lot of extra funds they're looking to spend as of late. All right, so there's your whole Amazon. There's my top 3 that I really want you to watch as far as the tech companies. Okay, NVIDIA, just watch 160. Okay, very easy here, very simple. What does it do at 160? If we get back above 160, break into a new high, 161, right? We got more blue sky territory into 164, 165, another psych level up there if we go higher. Okay, nothing really to write home about. The pullback level on the video would be 156 to 155. That's the support. So watch that. The video, just let it run and wait for the big pullback. AVGO, same thing, semiconductor sector. Breaking into new highs. I want to just watch the highs here. Does it double top right here and the resistance comes in and it pulls back? I want to watch that 277. And does it try to get to that 280 number? I'll just be watching that for a bigger pullback. Obviously, I want this gap to fill if possible in AVGO. It's been the strongest semiconductor. So you want to definitely get ready for some AVGO shares come fall time when we do get that pullback, typically in the fall. All right. AMD, okay, I like AMD that it's pulling back here because AMD has been a lagging semiconductor, as many of you know, right? It has not broken back into all-time highs at 227. So when I say lagging, typically the stocks that you want to look at are the ones that have not broken into all-time highs, right? Google still not back at 206, Amazon not back at 242 yet, or 250, where it's most likely going to be. NVIDIA, you see there's broken into new all-time highs. AVGO, new all-time highs. AMD, lagging, okay? So any pullback on AMD, I like for call options. Just get ready for them. I like this daily 20 as a big support level. So watch that 129 to 130 level. If we do pull back deeper than that, if we break underneath that 123, that's where it gets a little bit concerning. So I always want to be prepared that, you know, the market may shock some people. So I want to prepare for the best, you know, prepare for the worst, hope for the best, and most likely it's going to end up very well. Okay. So I want to pull back here, ideally, and that will be an amazing, amazing pullback at 123 or potentially 130. Okay. Watch those daily moving averages right there at 123 and then 130. Okay. Let's go to Tesla. All right, Tesla's doing some interesting stuff here. Also almost consolidating, like I said last week, into this kind of stair-stepping move here. So I personally think Tesla's just in a limbo phase, trying to decide where it wants to go, because anytime I say that it's hovering around these moving averages, it's trying to decide which way it wants to go. So it's above them now, still a higher lows, and this could be a nice, you know, bull flag that could be forming. So I would look at Tesla as more bullish. If it's above 316, I would look at 325 ideally, but if it's above 316, 320, consider it still bullish. It wants to go higher. If we break underneath that 310 level, we could have a bigger pullback closer to 300. So I'll be watching that 300 level on Tesla as a support to hold. Microsoft, just watch 500. I've told it week in, week out, I need Microsoft to do something different out of this grind channel since it's had its earnings. Okay, it's been grinding ever since. Now, one thing I want to pay attention to on Microsoft is, you know, is it going to do an okie doke, right, into its earnings? Is it going to have like expectations that are just too far-fetched? And a lot of times that's what happens with very strong companies. It's already kind of priced in from its last earnings, and then the new earnings kind of comes in with guidance is off or something like that. So I will be watching Microsoft for maybe a pullback for its earnings potentially. Okay, so I'll keep you up to date once the tech earnings kind of come in. So leaving Microsoft and Meta alone, same thing. Meta back at all-time highs. I think it's going to take it out. This is just another pullback in my opinion. 700, watch 700 as the deeper support level there on 700 to 706 on Meta. Okay, not really interested in that. TSM, okay. It's one of those semiconductors that's starting to get a little bit of a signal here. Okay, I like this hammer, inverse hammer candle there, a little bit of a shooting star as we call it. Okay, if it breaks underneath that 233, that would have been underneath the previous day low, or excuse me, a previous day high. So if we get underneath that, right, that could present a bigger pullback where it might take out the previous day. Okay, something like that. So I want to watch TSM. Is very interesting here as it's been making a tremendous run. But again, as we pay attention to RSI, look at that, super overextended. It is due for a healthy pullback. That's all I'll say. Not tank anything unless something crazy comes in. But it does have earnings in the next couple of weeks. So that could be the catalyst that pulls it back, in my opinion. Okay. So watch TSM. I kind of like this chart as it was an amazing dip buy. Just beautiful chart. Just hasn't even had a big pullback personally. Just tremendous run here of just grinding and grinding and grinding. Just no pullback, no break of structure. Yeah, I'll be looking at 220 maybe as a pullback level, but just extremely strong. Robinhood. Now I'll go over Palantir and a couple others. Okay. Robinhood here, as you can see, it pulled back. It had some, data, some news. It was due for a pullback. Like I said, sometimes this stuff happens where it, gaps down. Look at this RSI. It was at 80. Come on now. All right. So I think Robinhood personally is about ready for a little bit of a cool off. But I think personally it's going to try to fill this gap. And if we get some type of reaction here where it could be like a head and shoulders, look at this here, 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 something like that is maybe what I would look for at $96 to $98. Okay, 96 to 98. If we do fill that gap up there, okay, 96 to 98. If it gets stuck up here like this, right, I may look for something like that. All right. Now on Robinhood, what you can look for is maybe if we hold right now, which we are, if we hold this higher low here, this could be a nice little gap fill opportunity for a squeeze back up into this gap. Quick money, 94 to 98, right? So I would look for those call options on Monday or Tuesday for Robinhood, all right? JP Morgan Finance, just extremely strong. As you can see, finance sector, extremely strong there. Kava, I love this, right? Pay attention to Kava. I talked about this last Sunday. This is one that you need to keep on your radar. It is ready to go, in my opinion, okay? At least back to 100 from here. As long as it holds up $80 back to 100, looks great. Pay attention to Kava. HIMS, I like HIMS back at 34 to 35 bucks. Okay, if it wants to break back above 52 and reclaim this gap fill here, that's great. Then we can take it up and squeeze it back up to 60. But in my opinion, with the market a little bit, is this a little bear flag that breaks underneath that 46 and we start testing those lows, something like that. Okay. So I like the bigger pullback on HIMS. Watch it, pay attention to it, turn your alerts on. Any pullback on HIMS, I love it. Okay. Coinbase. Beautiful hold here at 340. Okay, beautiful hold there at 340. Simply another bull flag there. Coinbase might want to retest the high at 380. It's trying to get to that 400 level. So I'd really just watch that 400 and 380 level to see if it can break into new all-time highs. If it breaks underneath this low of 333, then you're going to get a bigger pullback into 300. Again, RSI, market pulls back. There's the RSI already getting a little bit overextended, but I think Coinbase is due for a bigger pullback, but it's strong until proven otherwise. Okay. A couple others, and then I'm out of here. Let's go into a couple of healthcare stocks here. CNC is one I wanted to put on your radar. Okay. For those who don't know, the doctorate is real. It's in a background of pharmacy as a pharmacist, to PharmD, doctorate of pharmacy. Okay. So a lot of the healthcare stocks I am familiar with. I'm very familiar with Centene. Okay. I think this is a little bit of an overreaction. I know the Medicare and Medicaid space and serving underprivileged insurers is just insurees, I should say. It just is not good right now. However, from a stock perspective, this is a solid company. Okay, so they got their earnings coming up at the end of the month. I personally think 30. If it ticks down into 28, that's even better. But around $30, I think it's an easy money dip purchase for shares. If you want to be a little bit safer, if you want to do options, you can. They are fairly inexpensive. So let me show you an option that I like on it. I typically, when you see that big of a reaction, right? I like going further out for leaps. I mean, like 55, $60 for those that have bigger accounts that want to spend $300. If you don't want to spend that much, I understand. You can go to the end of the year, right? And then recovering back to $50, I could definitely see that. Or if you want to do it more in the money, right there at $40 to the end of the year, okay? So a little bit closer, I would say probably into the September timeframe, right? A little bit more interest there, a little bit less expensive, right? If we can get a nice pop, if it pulls down to 30, right? These 35 to 40 right there in that range, 35 to 40 for September 19th. I like those a lot. So look at a target of returning back to about $40 towards the end of the year. And if it pops on earnings, you could get 50. All right. So Centene, put it on your radar. I think great purchase right now. Another one, Merck, entry, ready to go. All right. Look at this continuous trend upwards, and it's pulling back nicely with call volume. I've got a target of $90 to $95 on Merck personally. It's got earnings coming up at the end of the month. So I think anytime on these pullbacks around $78 to $81 is a great purchase on Merck for shares, and also long dated call options, which I would look at probably October timeframe and look at those 85 or 90 calls for October. All right, you can put more time on it if you want. August 15th is probably the earliest, especially for something that can make a big move. Give it at least 2 months, okay? That's my rule of thumb. If it has a lot of room, give it at least 2 months minimum, okay? So look at the interest on those already building. I like 85s. But always keep your stop losses on if it does decide to break back underneath that 80 and come all the way back down to $75, okay? But I like Merck. I think it's consolidating down here for a major move that would look something like this. Something like that, okay? So I'm being a little bit overzealous, but I like how that looks, okay? I've seen it many a times. You have too. You know what I'm talking about, okay? Another one, Bull, okay? Told folks for share buying, if you bought shares, if you listened, awesome. This was a Robinhood alternative. Okay, this is what I'm on right now, which is Webull. I love the platform. If you don't have it, I'd recommend it. Links down below. And any pullback into $12 to $13. If you can get another pullback deeper than that, around that 1175 range, that's even better. But again, Webull has broken back above its key moving averages. So look at that. Daily 20, look at that takeoff. Daily 200, look at that takeoff, right? So I've got a target on this of $20+, okay? Right, once it gets past that, $18 to $20 level, it's gonna be a takeoff, all right? So Webull, pay attention to it. Any red days or red candles that you see, I would begin buying up some shares, put some automatic. This is the same setup that we took on Ionic, on Palantir at $16, right? These are the same setups that we took in Robinhood as well when it was underneath $10, even when it pulled back to $30, right? These are the same setups, okay? So make sure that you're a part of them. If you do have some extra funds on the side, and I'm not talking about trading, I'm talking about shares first, but you can also do long dated call options. You can do both, all right? So I love this. Pay attention to it. That's it. I'm wrapping up here. Oracle, another one paying attention to, and then Palantir. I know people have a lot of questions on Palantir. Levels on Palantir, 130 to 133. It needs to reclaim that daily 20, okay? If it can reclaim the daily 20, this is going to be a nice recovery there back to the upside. So watch that 136. If it gets above 136, I like it. Take it to the upside. You can look at call options. But overall, Palantir gets back up in this range, I think we got another pullback that's coming. It's another setup for sellers to step back in my opinion. I've got a pullback target on Palantir still about 110 to 100. Okay, 110 to 100. And that seems drastic for some folks, but I'm just telling you right now. All right. Oracle, 240. Just look at 240, look at 250. I'll just wait for a signal for it to pull back on a weekly time frame. Just extremely bullish, just take off to the moon. All right. Well, everybody, I try to go extensively as possible, as quickly as possible. I know a lot of times it seems very fast for those of you that are still getting a hang of it. Like, what's the level? What's this? What's that? That is where you can take this information, go to some of the learning videos, check them out. If you want to join Leverage University and get the real inside scoop day in and day out, updated levels, charting, all those things, I'll give you a little sneak peek for those that have never seen it. All right. I'm giving the levels here intraday. Okay. So after I do this, I give the exact levels of what I see in the morning. Right, break 274 for continuation, pull back into 176 for calls, break 179 for continuation, right? All those things are happening inside of our Discord and also shares as well. So for those that want to not participate in trading, but you want better entries on your share positions or how to manage your portfolio, so to speak, this is not financial advice. However, we have done very well in here as far as our entries on a lot of stocks, okay? So there we go. There's James up there, 35% on work calls, looking good. I already put CNC up here, looks great. Probably James that liked it. Yep. So we're on the same page. All right. Peace, love, and blessings to you all. Thank y'all so much. Until next time, make sure you get a like, a comment, subscribe, as well as join Leverage University. Use those links down below if you want to support the channel. Until next time, I'll see y'all in the next video and throughout the remainder of the week. Trade safe, and I will see y'all in the next one. Peace.